Okay, welcome back. And in today's tutorial, we're going to look at bullish versus bearish. Now, we hear the term all the time in trading or investing, but what is being bullish versus being bearish? Well, when we're bullish, that means we expect the value of a currency or an equity or whatever it is we're trading to go up over a given time period. So if we're bullish, we want to buy or go long because we think the price will rise in value. Now, the opposite is true for bearish. If we're bearish, we expect the value of the currency to decrease in value over a given time period. In that case, we want to sell or go short anytime we are bearish on a currency pair. So bullish, buy, long; bearish, sell, we go short. So let's take a look at the chart. We're looking at the euro dollar chart here on the 1 hour time frame. And we can tell just by looking at price action that we are clearly in an uptrend. You know, we've got price moving from the lower left to the upper right. We know we're in a strong trend. And what we want to do in this situation is we want to look for buy points. We want to look for opportunities to buy. So we want to look for consolidation points, which means price is stabilizing and prepping for a move higher. We want to enter, wait for a move higher, wait for a consolidation point, wait for a move higher, wait for a consolidation point, wait for a move higher. Now, one thing that you'll notice, we talked about in prior lectures, that price is firmly above the moving average in all these cases. So if you're ever in doubt, make sure you take a look at where price is in relation to the moving average. Now, we would look for points to buy in this type of market and not necessarily sell. We always want to go with the trend. So if we want indications of when that trend may be over, again, let's use our moving average as a reference. When price starts to trend below the moving average, that's going to be our sign to exit the trade. So let's look at it on the other side. In this case, we're looking at a bearish pair. We're looking at the US dollar Canadian dollar pair. So we've got price moving from the upper left to the lower right, which means we're in a downward trend. Okay, we want to look for price to consolidate and look for positions to enter short trades. Move down. Price consolidation, look for a place to enter the trade to go down. Okay, and in this case, again, we see price firmly trending below our moving averages in a downtrend. So we would always want to look to sell a currency or go short in this type of market. If we're looking for an opportunity to get out, or if we want an indication of when the trend may be over, then let's keep our moving average in mind as a reference. When price starts to firmly trend above that, then we know it's time to exit that particular trade. So there is a quick overview of bullish and bearish. And in later lectures, we'll take a look at other tools in our toolbox that we can use in conjunction with this basic analysis to prep us for our trades. Thanks for watching, and I'll see you in the next video.